Alishia.
Well, there we have it, beating consensus, the earnings report that came through, where consensus was for earnings to come in at 108.1 cents. So a pretty encouraging year that we're looking at this stage.
Yes, absolutely. I think we had a strong performance in South Africa across all three of our operating divisions. Very strong cash generation, debt at an all-time low for Netcare over the last 5 years, interest cover at an all-time high. So a very good performance with margins widening in South Africa. More challenging in the UK though.
Well, we'll talk about the different markets.
Yes.
So let's hone in specifically on South Africa, because you say debt coming down, a little bit relief being brought to the fore by the fact that we've got interest rates sitting at all-time lows, and it's within a scenario where we've got consumers under pressure. So let's take a look at your assessment of the South African landscape right now, because certainly we've got, in that growth scenario, things a bit shaky at this stage.
Well, we still see a very strong demand for private healthcare, and notwithstanding that, we have a broader reach into communities that don't afford private healthcare, and we've shown that in our results today. But our debt also came down because of very strong working capital management, and we had record cash conversion ratios, 116% in South Africa. So we reduced our investment in working capital by some 470 million. So that also had an impact, albeit with the lower finance charges, interest rates as well.
That doesn't necessarily mean that you're not investing and not expanding your operations in South Africa. So let's take a look at that, because interesting prospects have emerged over in Lesotho specifically, where you ventured into a PPP type arrangement on that end, and pretty much setting the road ahead for you towards the National Health Insurance Scheme, which is set to take off in South Africa.
Absolutely, Alishia. That's our most exciting project. We are benchmarking our hospitals in South Africa, 54 hospitals, against the National Department of Health's core standards. But Lesotho for us is a landmark project where we are taking responsibility for health outcomes. And we are running a 425-bed hospital, 4 filter clinics, primary care facilities for the next 18 years for the Lesotho government. The private sector, in other words ourselves and our consortium partners, have literally put our money where our mouth is, and we have to beat the Millennium Development Goals around infant mortality and maternal mortality, and stop the scourge of HIV and TB. And it's a wonderful model because we're taking responsibility. We're employing doctors, we're employing the nurses, we're responsible for their training, and most importantly, we're responsible for the outcomes. We think that this is going to be the flagship model in Africa, and it's somewhat ironic that one of the poorest countries in Africa is going to show the rest of Africa, our SADC partners, and indeed the rest of the continent, how sustainable healthcare may be delivered.
One would have to assume that you've derived much lesson from operating in the UK,
Correct.
where they've had that exposure to the National Health Insurance Scheme for the longest while now. So take us through some of the lessons and how that's actually translated.
So in the United Kingdom, we've run 5-year projects for the NHS where we've been responsible for clinical outcomes, and that has informed in many ways the kind of model that we've put into Lesotho. I've no doubt we're going to learn many lessons in Lesotho, but we've put up a state-of-the-art 1.2 billion rand hospital. We have taken away this idea or decontainerized the idea about public health, that you have to do it in cheap facilities or old shipping containers. It's a beautiful state-of-the-art facility. It's the first MRI in the country, first ICUs, first ventilators, many first level 1 trauma center. And why not? And let's do it at a sustainable and affordable quality outcomes.
So already you're jumping on that bandwagon, looking to see how you can leverage off the National Health Insurance Scheme coming into play. Yes. It's certainly interesting, the shifts we're seeing in your 2 major geographies, because here where we're shifting towards the National Health Insurance Scheme in South Africa, in the UK, they're having to cut back on national health care, and where ordinarily the moves in the UK would be positive for the private sector, in the sense that it would open up this market, you are looking at a consumer that's under pressure. So just how much of a challenge is that market presenting for you?
So the UK is a challenge for the moment, and what we're seeing is that the NHS itself is under enormous fiscal constraint. Sir David Nicholson, who's the head of the NHS, has come out with this Nicholson Challenge, which says, let's save £5 billion a year in the NHS, that's £20 billion, and as a result they're not outsourcing as much to the private sector. But it's having the opposite effect, in that people are now we're seeing self-pay rise, because people are now saying we're going to be prepared to pay out of pocket to get our operations as waiting lists rise.
Is that appetite there?
Absolutely, and particularly amongst the elderly population that are saying, I want to have my knee replaced or I want to have my hip done, not to sit in an old age home in a wheelchair, but to be able to get back onto the golf course. And instead of leaving that as an inheritance or leaving that money in the bank, they're saying, let's rather spend that. Now, those are small green shoots we're seeing in self-pay, but there's no question that the consumer in the United Kingdom is under pressure, and private medical insurance, which is equivalent to our medical aid, has fallen by some 4.5% this year.
Yeah, so some challenge coming through, especially where you're already having to contend with the kind of currency swings we're seeing already. You know, the strength that we've seen in the rand has weighed on the translation of profits that you've reaped from the UK. To what extent has this come to bear on the business?
Well, interestingly enough, the rand was strong for most of the year, and because we book our profits on a monthly basis, we take the average for the rand, which was pretty strong. So it impacted our revenue line and our EBITDA line. Our revenues would have been probably 5.3%. They're at 3.3%, and our EBITDA was impacted by about 1.4%. But the corollary of that is clearly our debt increased and our assets increased because we took the rand depreciated quite significantly on the 30th of September.
Yeah, you've been going through a period of restructuring and consolidation in the UK. To what extent does that alter, if at all, your long-term view of your UK operations?
Alishia, we remain very confident about the UK and the demand for healthcare. The demand for healthcare hasn't gone away because the NHS has stopped treating patients or because there's a recession. People still remain and get sick, and either they die or they remain with those conditions. So we believe that unmet demand will mount up and will have to be treated at some stage. So longer term, we believe there is an outstanding future for healthcare in the UK.
Moving forward, are you looking at extending your geographic footprint further?
I think our key focus is consolidating our operations in South Africa, but really looking at how we leverage off the PPP in Lesotho and look to do this elsewhere in Africa in the coming years with other governments.